Welcome back to Explain the Charts, your ultimate destination for precise and profound market insights. Today, August 8th, 2025, our spotlight is on Apple Incorporated, ticker symbol Apple, as we conduct an in-depth analysis of its recent news and corresponding chart data. Apple has been buzzing with significant developments. Its Q3 earnings, reported on July 31st, notably surpassed analyst expectations. This strong performance was primarily fueled by robust growth in iPhone, Mac, and services revenue streams. A record-breaking services revenue of $27.42 billion, marking a 13% year-over-year increase, certainly contributed to the positive sentiment. Furthermore, iPhone sales also demonstrated impressive double-digit growth of 13% year-over-year in the third quarter. Beyond earnings, former President Donald Trump's pledge for complete tariff relief on U.S. manufactured products provided a significant uplift, potentially benefiting Apple's expanding domestic production investments. Adding to the bullish chorus, analysts at Melius Research recently raised their price target for Apple to $260 from $246, underscoring strong analyst optimism. While there are minor concerns, such as Apple losing some AI staff to rivals and an ongoing National Labor Relations Board complaint investigation, the company's accelerating investments in AI, including private cloud compute and new Siri features, are significant positive drivers. On August 7, 2025, Apple officially closed at $220.03, reflecting overall positive market sentiment. However, it's worth noting a slight discrepancy. While news reports indicated a 3.18% rise on Thursday, our daily chart data shows a 0.53% increase from the previous day's close for August 7th. A difference that might stem from pre-market or after-hours trading activities being included in the news reports. Observing the daily chart for Apple over the past year, we can clearly identify a prevailing upward trend, albeit punctuated by periods of significant volatility. This long-term bullish bias is largely attributable to Apple's consistent product innovation, robust financial performance, and powerful global brand recognition. The current market capitalization stands at an impressive $3.27 trillion, reflecting its immense scale and market influence. Historically, the stock has shown resilience, frequently bouncing back from corrections, indicating strong underlying demand from institutional and retail investors alike. The overall trajectory confirms that Apple remains a titan in the tech sector, consistently attracting investor interest despite various market fluctuations. Let's narrow our focus to the daily chart's performance over the past few months, from June to early August 2025, to pinpoint recent price action and key levels. Here, we see an interesting divergence following the positive Q3 earnings report on July 31st. Despite the strong fundamental news, Apple experienced a notable sell-the-news event, with the price dropping significantly on August 1st. The candle for August 1st shows a close of $202.38, a sharp decline from the previous day's close of $207.57. This created an immediate resistance zone around the $207.50 to $208 level, a price point the stock had recently fallen from. However, this dip proved to be short-lived, as buyers quickly re-entered the market, initiating a powerful bullish reversal. On August 6th, Apple witnessed a substantial surge, closing up 3.71%, a move likely fueled by the market fully digesting the positive earnings report and the promising tariff relief news. This strong bullish momentum continued into August 7th, pushing the stock to close at $220.03. This recent rally has propelled Apple well above its previous resistance levels from June 2024, notably around the $214 mark. The successful breach of this historical resistance now establishes the $213 to $214 region as a critical new support level. Should the price retrace, we would expect strong buying interest to emerge around this former resistance turned support. Looking further down, The immediate support from the recent low is established between $205 and $208, which marks the pivot point of the current bullish reversal. On the upside, the current price is nearing previous highs from late 2024, around the $230 level, which could present the next major resistance. The consensus analyst target of $233.11 suggests that there is still room for growth, aligning with the strong fundamental tailwinds. However, it's important to consider Morningstar's fair value estimate of $210, which indicates a slight overvaluation at the current $220.03 price, suggesting a potential for price correction if market sentiment shifts. The volume accompanying this recent upward move has been robust, especially on August 6th, lending credibility to the breakout and the strength of the underlying buying pressure. This sustained volume confirms that the rally is not merely a short squeeze, but reflects genuine market confidence in Apple's immediate prospects. Now, let's switch to the 15-minute chart to gain a granular understanding of the explosive price action that defined August 6th and 7th. Unfortunately, our 1-hour chart data does not extend to these recent dates, so we rely on the 15-minute timeframe for this detailed view. Beginning on August 6th, we can clearly see the initial breakout from around the $205.50 mark. Successive large green candles, accompanied by significant transactional volume, highlight the intense bullish conviction entering the market. This surge was not just an overnight pop, it formed a clear, sustained upward trend channel, characterized by consistent higher highs and higher lows. Intraday, key support levels quickly formed, with the price finding firm footing around $209.50 after the initial morning push on August 6th. This level acted as a strong demand zone, preventing deeper pullbacks and reinforcing buyer confidence. As the rally progressed into August 7th, a new intraday support emerged around $214.50. The price bounced off this level multiple times, indicating strong buying interest at these higher prices. The 15-minute chart's final candle for August 7th shows a close around $221.29, pushing even higher than the daily close reported in the news. This suggests continued bullishness into the extended trading hours or just before market close. The consistently elevated volume throughout these 2 days, particularly during the primary upward thrusts, validates the strength and conviction behind this price movement. For short-term traders, this chart underscores the importance of identifying early momentum and entering on pullbacks to newly formed intraday support levels, offering favorable risk-reward entries. Breakout trades from consolidated ranges, like the one we saw on August 6th, were highly profitable opportunities. The relative absence of large red candles during the rally indicates minimal profit-taking or strong absorption of any selling pressure. Monitoring such intraday patterns can provide critical clues about the sustainability of a larger trend, as consistent closes near the high of each interval signal strong underlying demand. In recap, Apple, AAPL, stands strong at $220.03 as of August 7th's close, demonstrating a powerful reversal from its post-earnings dip. Crucial support is now established between $213 and $214, a level that previously acted as resistance. Should this break, the next significant support lies at the $205 to $208 range, where the recent rally originated. On the bullish side, watch for the stock to challenge the psychological $225 mark and then the historical resistance around $230. A sustained break above $230 could clear the path toward analysts' ambitious $260 price target, though this is considered a long-term aspiration. Reasons to be bullish in the short term are compelling: outstanding Q3 earnings, the promise of tariff relief for U.S. production, and aggressive AI investments. Technically, the recent high-volume breakout from its consolidation, marked by higher highs and higher lows, confirms strong bullish momentum. However, a degree of caution is warranted due to concerns over iPhone 16 sales and an NLRB complaint, which could introduce volatility. Morningstar's fair value estimate of $210 suggests the stock may be slightly overextended at current levels, a perspective to consider for long-term holders. For short-term traders, sustained trading above the $214 level is key for continued upward movement. Dips to this level could offer opportunistic entries if confirmed by buying volume. A clear breach below $213 to $214, especially on increased selling volume, would signal a potential retest of the $205 to $208 support zone. In the long term, Apple's growth trajectory will heavily depend on its AI advancements, successful product launches like next-gen AirPods, and continued penetration into crucial global markets such as China. We assess a continued push towards the $225 to $230 resistance as moderately likely in the very short term, given the current bullish catalysts and technical strength. The likelihood of reaching the $260 target in the near future is lower, perhaps only moderately likely within the next 12 months, contingent on sustained strong performance and broader market tailwinds. Look for continuous high buying volume to reinforce the bullish trend and validate any further breakouts. Conversely, declining volume on upward moves or increasing volume on downward corrections could signal a potential exhaustion of the rally. Keep an eye on any further official announcements regarding tariff policies and the rollout of new AI-centric features, as these will be significant drivers. Always remember to conduct your own due diligence, establish clear entry and exit strategies, and manage your risk effectively. Thank you for joining us for this in-depth Apple analysis on Explain the Charts. Don't forget to like this video and subscribe to our channel for more valuable market insights.